Yo, what's good? Welcome to the very first Fundamental Friday. So, basically, what Fundamental Fridays are is I'm going to go over something that has to do with fundamentals, whether it be, the current state of the market or how to trade data or news or like what I'm doing today, different aspects of fundamentals. Like today, we're going to talk about fear and greed and how to trade those, what instruments respond to fear and greed. Also, can be called risk on, risk off, since that's what a big part of what I do is determining whether the market's in a risk on mode or risk off mode. Um, so, yeah, let's get right into it. Here we have the chart for the British pound, Japanese yen. Basically, the pound is not one of those currencies that respond well to risk on and risk off. Neither is the euro, and for the most part, neither is the dollar. Unless there is an extreme sense of fear, then oftentimes the dollar becomes a safe haven. The US dollar, that is. Um, but for the most part, the currencies that are impacted the most by fear and greed are the Japanese yen, the Australian dollar, and the New Zealand dollar, and sometimes the Canadian dollar. Um, and lastly, the Swiss franc. Those are the main currencies um, that respond well to greed and fear. And I'll get into that a little bit more. But yeah, and then of course gold. It's not a currency, but as far as commodities, gold and silver respond well to fear and greed. And the stock market, the Dow Jones, the S&P, those all basically are just a measurement of fear and greed, as well as VIX, um, which is that's getting more into stocks, but it it measures volatility, and usually when there's fear, volatility increases. But regardless, talking about currencies, the yen is a safe haven, and so is the Swiss franc. So those are the currencies that will, in that case, appreciate or go up when there is fear, when things are going bad. And we can see that here. Um, just over the last few months here, this is the a yen cross here. We saw selling when the U.S. Iran tensions were going on. Then fear died down, and then we saw this then head up higher. Then we had the initial coronavirus fears, which happened when it was spreading in China, and then that died. The fear died down, and then here's when it started hitting other countries a lot harder, and of course the U.S. And then we saw huge risk off going on. So that's the reason that I was able to go short right here. I was able to go short right here. So playing risk on, risk off is there's a lot of good opportunities. I was also able to trade here if we can GA. I was able to trade it long as well based off of fears. I actually just caught this move up here, and I was able to trade GN. Basically, the pairs I trade are almost all impacted by fear and greed because they all have either the New Zealand dollar, Australian dollar, and Japanese yen crosses. So, yeah, this is very useful. And one thing that if you really are unsure, you can sort of check out this fear and greed index. It'll sort of tell you what the market's thinking. Um, and also, it'll give you an idea of when there's false rallies or uh, you know, um, false rallies or false sell-offs, such as the stock market right now, right? If you take a look at it, you can see we had a huge rally up. This was almost 20%. So does this mean that the bear market's over? It's about to head higher? Well, let's take a look. You can see there's still extreme fear in the market. There's no reason that this would continue and break and then make new all-time highs anytime soon. So this would be a sort of a relief rally, not a I guess a real move up. So I know a lot of people are looking to sell this rally, or if it heads a little higher, sell this rally, because there's still a ton of fear, and there's no reason that it's going to change anytime soon, given that cases are increasing with the coronavirus. So that's one thing to look out for. Like, let's look at the yen here. Let's look at the yen. We can see it recently has sort of, fear has dissipated a bit, and we've seen the yen head higher. Now, do I think, just like, the S&P, do I think this thing is going to come and break all, new highs? Probably not. I'm thinking we're going to get another move lower. Why? Because, this is just sort of the start of the worst to come. In the next month, we're going to see a ton more economic damage. Everything, is still going to be closed, if not just starting to reopen. I think we're just seeing the start of the economic impact from this virus, and, this is not showing that. So I'm thinking this might be a good rally to sell. But regardless, that's sort of how I find opportunities, is looking at fear and greed, and that was the basis for shorting right here. I knew that fear had just started increasing, but hardly. However, cases were going to spread in the U.S., and we could see, the impact of that. It sold off. So, this is a very valuable skill to have. And honestly, it's really not too hard to judge fear and greed, because it's simple. Is something bad happening? Is something bad not happening? Like with the trade war, obviously there was fear with that. With U.S.-Iran tensions, obviously there's fear with that. So it's not super complex to figure it out. If there's not an immediate threat, in the world, then usually the market is more greedy. That doesn't necessarily mean when everything's going good to buy the Australian dollar, because in currencies, the markets are impacted a lot more with central banks and what each individual country is doing, rather than just, is the market risk on or risk off. So, that's something to take note. Anyways, I hope this video was helpful. I just want to do a quick little video talking about fear and greed, how you can trade them, what's impacted, because I know for me that I would have loved to know this information when I first started trading. It would have, helped me find opportunities a lot better. So I just want to give back with that. Also, another video coming either tomorrow or the next day, so stay tuned, and have a great weekend, guys.